Christian B. Burnaby, Vancouver-based real estate agent. Welcome to Rapid Fire Real Estate, where today I'm going to take you through 5 topics, and we're going to go pretty quick here, 90 seconds to 2 minutes per topic. And I want to give you an interest rate update, post Bank of Canada decision. Second, I want to touch on amortizations, the extension of 30-year amortizations on pre-builds. A criticism of this from the online realtor community. I'm going to share my thoughts on it. Third, sales to listing ratio, what's selling, what's not. Fourth, what could be a leading indicator that the market is bottoming right now? There were some big headlines coming out of the Toronto real estate community, and nobody really looks at it the way I do. And I want to show you what I mean by that. And fifth and finally, a key question you can ask any real estate agent you are interviewing for the sale of your home or the purchase of your next one to find out whether they're any good or not. Okay, let's start off with the first topic, interest rate update. Bank of Canada drops the rate by another 50 basis points. That's the overnight lending rate. This affects the variable, not the fixed. So where does that stand? One of the big banks right now is offering 4.5% on a 3-year fix and a little over 5% on the variable. So it all depends on where you think the variable is going to be 3 years from now. Certainly my broker sources tell me they think it's going to be below the fixed. I don't know for certain, and I think that's the honest answer we can all have. Credit unions are offering some better rates still. The one I have here for Coast Capital is 3-year fixed 4.58, 3-year variable 4.98. So not bad, and that's now the thing with credit unions is they do not make exceptions to your file. And good mortgage brokers will sometimes need to make one or even find 2 exceptions when they're presenting your application to the underwriting department, asking for $1 million on your behalf. Not everybody has the smoothest file. So you really do want to be working with a very good mortgage broker, whether they're an independent or one with the bank. If you need contacts, of course, you can contact me and my in the show notes below, where it's very easy to find mine. Okay. Second thing, amortization. If you're buying a pre-build now, whether you're a first-time buyer or not, you can extend the amortization to 30 years. So 30 years to pay back the whole mortgage. Some criticism from YouTube realtors saying that this is bad because that means if you're paying CMHC premiums, right? Because this is a requirement here in Canada. You got to pay insurance if you don't have a 20% down payment. And that means that you're paying less off your principal, and after a 4 or 5 year term, you've got $18,000 more that you wouldn't have if you went in with a 20% down payment. Yes, this is correct. You will not be paying down your principal as fast if you're only putting down 5% and you're paying CMHC. That said, I still think it's a nice option to have, and here's the 3 reasons. 1, you get a home. Better to have a home, especially if you plan on being in Vancouver, Burnaby for the next 20 years, than not having a home, than having to rent. Second is presumably the value of your home is going to be higher than $18,000 5 years from now, right? Could be $60,000 higher. Third, you have a choice. Of course, you don't have to do this. You can wait and save up the full 20% of the down payment, and hopefully the market hasn't moved away from you. So you have a choice. So that's why I still think it was a good move on the part of the federal government. And the reason they did it, of course, is they're trying to spur the construction industry, right? They want buyers buying pre-sales. That means construction workers have jobs and so on and so forth. Okay, third thing is listings to sales to listings ratio. Where are we? Here in the greater Vancouver area, we've got 13,245 listings on the market. That was of November 2024. That's up from our normal seasonal average of about 10,500. So we're, a little under 3,000 listings higher. As a buyer, this is great. You got more to choose from. You got a buffet of options. As a seller, of course, you're just one more vegetable in the salad bowl. No, it's not the same for all the product types. The hottest product type is the townhouse market, of course, right? For every townhouse, there's 20 condos. Lots of supply with condos, but not so much for townhomes. Sales to listings for townhouses, 23%. So 1 out of 5 is selling. So that's a seller's market if you have a townhouse. Condos, 19%, stronger than I would have anticipated. Meaning, again, 1 out of 5 condos is selling each month, and the detached market is at 13%. So 13% of detached homes. Now, there's some variability there. If you're looking at a city like Burnaby, that those numbers are a little bit higher because Burnaby has adopted the provincial mandate to do these 3-plexes and 4-plexes, and builders love that. So a lot of the lots here in Burnaby are getting picked off pretty quick, especially in certain neighborhoods. But not all the cities have adopted the provincial mandate, the provincial plan, like Burnaby has. And in fact, Burnaby is a leader in it. What you need to take away from this as a homeowner is if you are downsizing from a townhouse to a condo, the time is on your side. If you are upsizing because you're having a family, going from a condo to a townhouse, you need to be moving a little bit quicker. There's a lot more condos on the market. That area of the market is going to be soft, I think, for some time, but not townhouses. They are still very coveted. People want the extra space and a lot more affordable than detached homes. Okay. All right. Topic number 4 here. Best potential sign that the market may be bottoming. There was an article that came across the news from the Globe and Mail that 8% of realtors in the Toronto area had quit in 2024. A huge number. We haven't seen this many real estate agents leave the industry in the Toronto area since the early 1990s. And, well, what happened in the 1990s? The 1990s, the real estate market, it bottomed. It was due to a recession in 91, 92, and it wasn't really until the mid-90s it stabilized, and the later 90s it picked up again. But the reason why I think this could be an indication that the market is bottoming there is that times are tough. When sales, like they are in the greater Vancouver area, are down 30% for the last 2 years, it's harder to get a list. It's harder to get a listing to sell. It's harder to get a buyer into a product. I know that. I speak from personal experience. I see it as well. And as a part-time agent, if you're only doing 2 or 3 sales a year, which is more than half the agents in the real estate board, you basically have no income. And, I'm looking at, for example, some of the discussions I'm having with my colleagues out in the Fraser Valley who work for some of these bigger teams. Like maybe you've seen that TV show, the 2 property brothers. One guy's the fixer, one guy's the flipper, right? One guy's the contractor, one guy's the realtor. And one agent was telling me he worked for in that brokerage and they had a 50-50 split. And I'm thinking, if he's selling a condo in Fraser Valley, making a $400,000 condo, making $5K, $6K, and he's now forking over half of that. He's walking away with $2,500, running around with a buyer for 6 months. That's tough times. And so that's a reason why a lot of agents will leave the business, because we also have overhead. For example, I'm pretty lean and quite frugal, and I'm looking at expenses at about $4,500 per month. And I'm frugal. So 8% of agents gone in a year. That noise you hear is a collective cheer from the public. It is what it is. You got to take these things with a good sense of humor. But what it does tell me is that if we see numbers like that maybe people who got into the business, who's seeing dollar signs, are realizing it's a lot harder than it really is, and they get out of the business. Because I have seen the opposite happen, and that was in the 2010s here in the greater Vancouver area. And I recall, I think it was 2017, where in 1 year I talked to 3 people, 2 friends, 1 past client, all of them running out to get their real estate license. And that's when I knew that the market had reached a high point. And lo and behold, actually, it really ended up being a high point in condos that 2018 spring. So that a good indicator, I believe, is look at how many people are running out to get their real estate license because they think it's easy and it's easy money. That may be the indication that the market has peaked. And if you see people throwing their licenses on the table and walking away from the business, that shows it's gotten really hard. It's a slow market, and perhaps the market is now bottoming out. Now, it can still take 2 or 3 years, though. Don't assume that the market is just going to increase right away. These things can take some time. Okay, and just on that note, in the Toronto area, I was astounded to find there's over 70,000 realtors, whereas a similar-sized city like Chicago, there's 12,000 realtors. So I can't explain the differences there in between Chicago and Toronto. Okay, last thing, how would you find out whether the agent you are interviewing for the sale of your home or your purchase of your next one is any good? Well, a good question to ask them, if they've been in a business for several years or more, is, do you own your own property? Just wait for the answer. I mean, really, if you are in the real estate business, you should believe in the product, right? You should own it as well. And if you don't, it just tells me the person is not successful. And that's okay. You know, not everybody's going to be a top 1% or top 10% agent. And of course, there's life changes. If someone just got into the business 9 months ago, or change in the family situation, perhaps a divorce, you may move into renting for some time. But really, if you've been applying yourself in the real estate business for half a dozen years or so, you really ought to be owning your own home. I mean, can you imagine talking to a car salesman who sells cars for a living, who takes transit to work? I mean, how about meeting someone in the Microsoft store who's wearing an Apple Watch and uses an iPhone and uses a MacBook? I mean, he'll get turfed out of the Microsoft as soon as his colleagues or his boss sees him. He's gone, right? But you would you want to see somebody who believes in what they're selling, right? Not a blind belief. It should be a thoughtful belief. But in any event, I think you understand what I'm saying. If you've got opinions, comments, leave those in the show notes below. And as always, if you're looking for more help with a purchase or sale, feel free to reach out. My contact is in the show notes below. Thanks for watching, and we'll see you next time.